Prices are absolutely out of control, and they've been out of control for over a year now. And despite what Joe Biden will tell you, no, this isn't Putin's price hike. This is not the fault of the war in Ukraine or anything else. This is the fault of your government, of your Federal Reserve, of your politicians and their irresponsible actions over the past 3 years. Of course, the reason we're actually talking about this today is because we just got brand new CPI data out of the US, and in short, it's a ridiculously high 9.1% figure, which blew past expectations and has sent the markets into shock. Now, throughout the entirety of 2021, we had to hear from pundit after pundit and from government official after government official about how inflation was transitory, about how it wasn't real, about how it wasn't a problem. And finally, we've gotten to the point where they're saying that it's peaked, that we're finally on the way back down. But this data, which just came out literally an hour ago, proves that that is not the case, that this is not the end, and that it isn't going to end anytime soon. Today, we're of course going to look through this data. I'm going to show you exactly what the data says itself, and then we're going to look at what a couple of people are saying. And finally, we're going to finish with why the Federal Reserve is a fraudulent, corrupt organization whose aim is not to maintain low unemployment or to keep inflation at 2% as they will claim, but its aim is to keep the rich rich and to keep you poor. So what is the actual data? Well, this piece here is the publication from the Bureau of Labor Statistics, which tells you exactly what it is. And there are a few headline things to mention. Firstly, 9.1% headline figure for year-over-year inflation, which was higher than the 8.8% that was expected by most analysts and investors. For the last month alone, there's a 1.3% month-over-month increase in the prices of everyday goods, which is up from the 1% that we saw the month before, both of which are super high figures that should send you worrying. As for some specific things, well, the energy index is up by 7.5% from last month alone. Your energy is 1/12 more expensive today than it was 1 month ago, and that's driven up inflation a fair amount. Gasoline is even worse. It's up 11.2% from last month alone. Food prices are up as well, though only, and I say only with a little bit of irony there, only up by 1%, and that's the same for food at home and food in restaurants. To make matters worse, the Federal Reserve always like to make caveats about bad data like this. They say, oh, well, the headline figure was bad, but core inflation was far, far better, and that actually came in lower. Well, this time they can't say that either, because core inflation was higher than expected too. If anyone says anything other than inflation is running rampant, you know that they are lying to you because the data is proving them wrong. And the worst thing about all this is that we've had high inflation for over a year now, so the base effect is now in play, and it's now twice as hard to see a year-over-year figure rise because we've already had more than a year of high inflation. Now, this is obviously going to have far-reaching, wide-ranging consequences for the markets, for your investments, for the money in your bank and everything else you can think about. But the big one is that now the market is pricing in 150 basis point rate hikes over the course of the next 2 months, spread out of course. So there's now a decent chance of a 1% interest rate hike over this month, and then there's a decent chance that there's another 0.5% hike the month after that. Currently, interest rates, or the federal funds rate, is sitting at 1.75%, which means in 2 months it's likely to be almost double that at 3.25%. Now, it's also worth noting that the Federal Reserve told everyone, and apparently they meant it, that they were going to reduce the size of their balance sheet, that they were going to start selling off some of the assets that they've been building up over the last couple of years as they've massively inflated the economy. They put some MBSs, some mortgage-backed securities up for sale apparently, but there were no bids from willing customers at the prices that the Fed was willing to part with them. As a result of that, the Fed claimed that they would be reducing the size of their balance sheet by $45 billion a month, and so far it's actually increased over the last month, so that's the first thing that they are just outright lying to you at. What this super high inflation rate means is that the Fed might actually finally have to go through on their promise to do their damn job and to start reducing the size of their balance sheet to sell off the bonds that they hold, which will without a doubt impact the markets. It will cause net outflows from the bond markets, and that will cause yields to rise, making borrowing more expensive across the board as well. If we combine that with the fact that interest rates are getting stronger, not weaker, then it's pretty much damn clear at this point. But the Fed has no choice, but it has to induce a recession to try and bring inflation under control, or else inflation itself will be the reason for the next market crash, and it will be so much worse. Now, again, the government will tell you that this is for a myriad of different reasons and that it's nothing to do with the Biden administration or the Federal Reserve itself, but that is simply a lie. Inflation is the result of this poor monetary and fiscal policy that we saw over the last few years. They shut down the economy and they threw money out of thin air to try and keep it going at the same time as the government started spending trillions of dollars on unnecessary vanity projects to again keep the economy rolling. Putin's price hike is not the reason for this inflation. The reason is gross, irresponsible politicians like Joe Biden who have no regard for the safety and the reliability of the American economy. They just want to remain in power. Now, what are the actual pundits saying? What are some investors saying? Well, Jim Cramer here said that this is the last bad number. He's putting his neck on the line once again, although if he actually were putting his neck on the line, he would have been executed 1,000 times all over, because he's been wrong about inflation month after month after month for damn near 2 years at this point. He was an inflationist transitory cultist, and now he's joined the new cult of modern monetary theorists called inflation has peaked. That's what he's claiming here. But of course, he said this last month and he said it the month before and 6 months before that as well. What about a little bit of a more reliable economist then? Mohammed El-Erian is a pretty damn accomplished economist. He's been on the right side of history regarding inflation, saying that gross irresponsible monetary policy will lead to mass inflation and that the Federal Reserve needs to start hiking interest rates. So what's he saying here? Well, he's obviously unhappy with the state of inflation. He's unnerved at the fact that it's continuing to get higher. And his bottom line is that it's a further blow to the economic well-being of the country. And it's representative of the Federal Reserve's worst policy mistakes in decades. Now, how are the markets responding to this awful news? Well, as you might expect, not very well. The market has literally only been open for about an hour, but the S&P 500 is already down by 1.36% as I speak. You can see it right there. The crypto market's pretty much instantly corrected 5% down. Bitcoin is far closer to 19,000 than to 20,000 like it was earlier today. And this is the exact same thing seen with altcoins across the board because they're risk-on assets which follow basic economic principles like throw money into an economy and assets go up, take money out and asset prices will go down. Now, unfortunately, this is where the video is going to take a turn from the worst, and I know what you're thinking, how could it possibly get worse than that? Well, here's the problem. This data is already fake, it's fraudulent, it is not real, and it's already corrupted by the Bureau of Labor Statistics and the Federal Reserve to show a lower inflation level than the reality is. Now, there are loads of different pieces of evidence to show why and how the Fed fakes this data, but the worst one is, of course, shelter. For example, the Federal Reserve claims that the prices of shelter, i.e. renting or owning a home, increased by 5.6% year over year, according to this most recent CPI report. Now, that doesn't sound right, and if it doesn't sound right to you either, then good, because frankly, it isn't right. From March last year, house prices in the US are up by 20% year over year. Now, maybe you say, okay, that's balanced out by low interest rates, which by the way are no longer that low because mortgage rates are going up month by month as the Fed hikes interest rates. And maybe rents have been increasing at such a slow rate that this really isn't a problem and it averages out at 5%. Well, unfortunately, if you think that, you're just a little bit naive because, again, the Fed does not have your best interests at heart and they deliberately doctor rental price increases to try and hide this from you. They use something called owner's equivalent rent, where the Federal Reserve literally goes out and it asks 1,000 home owners, people who own their homes and do not rent them, if you were to rent your home, how much do you think it would go for? Now, that is literally as stupid as it sounds because homeowners don't know how much their home would rent for because they bought it usually years ago and they don't really rent other homes, so they aren't really aware of what the rental market is doing. As a result of this, owner equivalent rents lag the market by a ridiculous degree and they are not a reliable measure for how high rental prices are increasing. Now, were this the 1950s, then maybe I could see the logic in this. Maybe it was a little bit harder to gather data back then, but it isn't the 1950s. This is 2022, and with the internet and companies like Zillow, we have millions of data points with which we can actually build an accurate representation of what rental prices are. Now, speaking of Zillow, they literally do this. They put out their own data based on real rental prices on what they're actually going for. And the reality is that rental price increases are far, far higher than 5.6% as well. Year over year increases for the US as a whole are 14%. For New York, it's 20%. For LA, it's 15%. And for Chicago, it's 10%. Now, why, you might ask, doesn't the Federal Reserve use this accurate data which actually shows what is happening with the rental market? Well, the simple truth is they want the fake data to show that inflation is lower so that they don't have to act to curb inflation. So they use their false fraudulent 5.6% rate instead of the accurate 14%. Now, in reality, the fraudulent practices of the Federal Reserve and the Bureau of Labor Statistics go far, far deeper than this. For example, back in the 1970s and the 80s, when inflation was really high, the cost of beef was going up a lot. And so the Federal Reserve just decided to stop measuring it. They said that instead, people don't eat beef anymore, they eat chicken. So we're going to measure that instead because conveniently, it was rising in price at a far lower rate than beef. Now you can see all of this data for free from this website here that I'm showing you called Shadow Stats, who put out every single month corrected inflation data based on how the US itself used to measure inflation. Now these two graphs here show the difference between how inflation is calculated today compared to how it was calculated in the past. Now the first time the Fed changed the way they calculate this data in order to manipulate the people they're supposed to serve, they did it in 1980. And if they were still measuring inflation in the same manner today, inflation would be sitting at about 18% right now. They then changed it again in 1990, again to manipulate the people they're supposed to serve. And as you can see here, inflation should have been sitting at about 13% if they'd only doctored it once. Now, why is this happening? Well, there's one fundamental reason. The Federal Reserve is a corrupt institution that doesn't actually care about inflation or about employment as it claims to. It cares about asset prices and nothing else. It cares about keeping rich people rich and maintaining their high asset values and doing nothing for the common man. The truth is here that inflation is fundamentally bad for an economy. If the Fed truly followed its mandates of trying to sustain high employment and low inflation, they would want as accurate data as possible so that the correct decisions can be made, but they don't want accurate data, they want low data so that they can maintain quantitative easing, low cheap capital, and high asset prices. The way they do this is simple. They lie to you. They stare you in the eyes and they tell you untruths that don't make any sense and that fall apart the second you look at some independent data. Rents increasing by 15% a year will kill an economy on its own because soon enough, people won't be able to afford anything except the rent that they're forced to pay. If there was a true mandate to maintain a strong American economy, they wouldn't behave in the way that they do. It simply doesn't care about the economy because it is a corrupt institution created by the wealthy to serve the wealthy, and it relies on the ignorance of the American people who unfortunately just never have their eyes open to them, so they never even realize that they're being lied to. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world-famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.